This is February 7th, and let's go over my take on the earnings numbers for PayPal that reported last week on Wednesday, okay? So there's a lot of information to pile in here on a 15-minute video. I'm going to do my best to try not to bore you guys and throw so much at you, but this is a stock that's right here, like this graphic shows, right in the middle of the storm, and you have to make sense out of it, know how to separate emotion from actual facts to make a good decision of what to do, okay? I think the last thing you want to do is sell PayPal at a 52-week low. So you really have to look at the facts and really look at what's ahead of the stock, not what's behind it, to make a good decision with it, okay? So let's get started, but before we do, please hit that like button, hit subscribe. I definitely appreciate your support. Hopefully you learned something from this, and we have some fun in the meantime, okay? Let's get going. All right, guys, so before I get started, of course, I want to explain what PayPal is. Not that I have to explain to a lot of people what PayPal is. I think most of you will know, but of course, this is a payments app, merchant solutions, right? Credit products, Venmo, Zettle, Hyperwallet, bunch of these little businesses here, little applications that make it easy for you to transfer money and to do business. You also have some crypto stuff going on. So you have buy now, pay later, which is a big growth aspect. Crypto, of course, touch-free payments, etc. Send money with Venmo. Venmo also has the deal with Amazon that's coming here in the second half of the year, which is a big positive. We'll talk about that as well, okay? But if you're one of those people that travel, that like to have an easy, safe payment solution in your wallet, PayPal is for you, okay? Now let's get on with the numbers. Actually, not the numbers, the chart, okay? So this chart here for PayPal is a disaster. Look at this 5-day chart reporting Wednesday after the close and just gets slaughtered, man, just like a dead horse, man. Just getting pummeled here down to the 120s. We have a 52-week low of 120 when it was trading at 310 about a year ago, less than a year ago. So this has been a stock that's been demolished, not only because of the earnings. The earnings were like the final catalyst to kind of really just drive the pain into the stock. A lot of investors were already feeling the pain when they were buying in the 250s, $200 range. We started a position when it hit 180, 170. And we felt good about this position because we thought the growth rate, the user growth, the profitability of this company was already too oversold. And we added to this position. We were wrong, obviously, but we have to make sense of it, okay? So before we do that, let's go over the earnings numbers. So let's get on with it here. I want to go over these earnings numbers. We have EPS, revenue, other expectations, which is a little bit of a special thing in the stock, and guidance. Okay, we'll start with EPS at $1.11 versus $1.12 expected. That's a slight miss. Nothing too bad there. But that's not the whole story, of course. Got revenues at $6.91 billion versus $6.89 billion expected. That's a slight beat on the revenue, and that's the best part of the earnings numbers, guys. We're done. That's it. That's the best part. So when it comes to the other expectations, so PayPal, because it's a fintech stock, has a lot of different expectations, a lot of different measurements beyond your traditional measurements of other smaller stocks. This is, of course, a multi-billion-dollar market cap company. This is a large cap company. So there's a lot of metrics that go into effect here. We'll start with operating cash flow and free cash flow, which they were both misses here. You guys can see here, 1.7 bill operating cash flow versus 2.43 expected. Big miss. Free cash flow, 1.55 billion versus 1.77 expected. Bad miss as well. Total payments volume, you're going to see this a lot in a stock like PayPal. TPV, 339 billion expected versus 339 actual versus 343 expected. That's a miss. We also have merchant services growth, revenue before or excluding eBay marketplaces. I'll explain that in a minute. 6.7 billion, 22% year-over-year growth. That is actually a strong point, okay? We're talking about the eBay kind of separation from PayPal. If you don't know what that is PayPal several years ago made a decision, we're going to separate from eBay, as they were essentially almost like the only provider or the only payment solution to eBay, and they chose to kind of cut ties with them so they could expand to other areas in other markets. So that is a little bit painful because it's costing them a lot of money to separate from eBay. But without that, that's pretty strong growth if you don't count the pressures that eBay is bringing on the stock. Okay, we also have 9.8 million net new accounts, totaling 426 million for the year versus 431 million expected. That is a miss as well. And then we come to the horror show that is the guidance. Okay, this is the reason here this stock sold off, is extremely poor guidance and also a change in expectations from management, essentially just flipping around saying, hey, we're no longer focused on this kind of growth of users at all costs and these incentives of like, hey, open a PayPal account, we'll give you a free $50 or a free Bitcoin or an Ethereum or a portion of Ethereum or some Dogecoin for free. None of that. That is going to be changed. So for the full year 2022, the revenue to increase 15 to 17%. That's below the expectation of 18% the market had already set for it. So they're reducing guidance. Not good. Okay, guidance extremely important, not good. Then they also lowered guidance on EPS, earnings per share, 460 to 475, under the expectation of 521. That's a bad lower. That means they're not expecting to be as profitable as before. Net new active accounts for 2022, 15 to 20 million versus 55 million expected. Oh my God, that is a huge lowering of the guidance. But this goes in part with a change of strategy from users at all costs and paying for user growth as opposed to ARPU, which stands for annual revenue or average revenue per user. Average revenue per user, ARPU, okay? So that's the change in strategy that we're talking about here. For net new active accounts, right? Meaning no incentive-driven campaigns like we talked about. The new standard is quality over just mindless growth, okay? So when we think about that, and we think about this change in strategy, Wall Street has to also really ponder this change in strategy and reprice the stock of PayPal, hence what you see in being demolished in the aftermarket and in the days after that. But since it's been demolished so much, I want to see here on the forward PE metrics, 26 times forward earnings when the stock has never traded that high or that low actually on a forward PE basis. That's pretty intriguing. That's intriguing enough for somebody to take a chance on a good company like PayPal, payment solution giant. I don't see this as so much as a negative. As somebody who's always trying to kind of catch the cheap side of a good business, this could be that business that if you're new to the stock market and you want to pick up a stock that is one of these legendary good producer stocks, steady businesses, PayPal may not be a bad idea for you. Just a suggestion. We hold this stock at $173 a share at the moment. We're still building our position. We're still going to build it more, but patiently. I'm in no hurry now because I know the stock is not going anywhere for any period of time. I know it's not going back to 170, 180. It's stuck in the penalty box for quite a bit of time, for at least 6 months. So if you're trying to get in a PayPal position, just be very patient. That's my suggestion. For those of us that already have a higher cost basis, many on Wall Street, many experts have this really high cost basis here in comparison to 121. We're kind of stuck here trying to average down for the next couple months. So we're going to be waiting for extreme weakness to average down, get that cost to come down. But if you're new to this stock, maybe worth for you to look into it and actually do your own research and make your own decision on it, okay? Now, moving on. Now, I made this real quick to try to keep it as fast as possible, but I wanted to go over separating emotion from facts. You're going to hear a lot of people talk about PayPal in a very negative tone now, like these guys didn't deliver, they're done, they're not going to be any better, and that's just a very short-term mentality on the stock. If you take a long-term mentality of the stock, think of this as a stock reset, as a price reset on a great company. That's not going anywhere, guys. So let's talk about the bad first, because everybody likes to talk about the bad. And we'll start with the lost faith in management's ability to deliver. In the Investor Day presentation back from November, they did not tell us this was coming. Let's be frank. They should have. They didn't tell us. And it could be chalked up to, hey, November was a really strong month for PayPal, right? Or maybe October, November were really strong. December was not. And there was a lot of pull forward demand into October, November, hence why their guidance was different. But then December came and it was a disaster for PayPal due to maybe supply chain issues, due to the Omicron variant. But essentially, it seems like they lied. Do I think they lied? No. I do think that they didn't see December coming and how bad December would be for the payment solution business. And they just sort of screwed it up, essentially, okay? And then we're moving on here to the eBay transition. That's nasty, guys. It's drawing a lot of pressure from eBay. Let me look at these numbers here from eBay real quick. Yeah, so I'm looking at the numbers here. If eBay put $1.4 billion of pressure on their top line numbers. That's their revenue numbers. And they're still expected to put about $600 million in pressure downward pressure on the revenue numbers in the first half of 2022. So that eBay transition is nasty, and it's cutting and disguising a lot of good in the stock, in the company. So we have to look out for this. But again, when I see here on the good side, the eBay transition is expected to be completed by the second half of this year, which may mean some positive news for the stock later on, okay? Now, in speaking about the transition and approach to the new guidance, okay, I put here, rethinking of approach to guidance and net new user growth changes the way the stock is valued. So Wall Street has a tendency of valuing stocks, and especially growth stocks, on the amount of eyeballs. For example, back in the .com era, the amount of eyeballs that go on a website, even if they don't mean income, if they don't mean actual revenue, they do that. With Netflix stock, Wall Street does that a lot, based on user growth. Okay, how much are the new users, for this quarter? And of course, Netflix is disappointed on that, so the stock gets punished, even though they're not measuring how profitable those users are. So when the approach to net new user growth is implemented, it may prove to be justified, meaning the high cost of customer acquisition versus actual profitable user growth is being actually prioritized. It may prove to be good. So we'll see. We'll find out. I think that it may not be a bad move. We're going to have to see how they execute on that plan. Based on their execution, we will hold the stock or not, and we'll go over that at the end, okay? But on the bad side, again, increasing ARPU, that's average revenue per user. That may need new features to be added to the app, which may prove to be expensive. That's the downside of that change of mentality. And they also may be forced to acquire a stock trading app like Robinhood. I hope not, man. Whew, I do not like Robinhood. I don't like the app. If you're new, that's fine for you. But if you're a seasoned investor, you're probably not on Robinhood. You're using one of the most, the more kind of serious stuff, okay? So we've been over here on the good side, and we're talking about increased focus on ARPU, Venmo, and Amazon deal still not live. This is huge, guys, for PayPal. That deal scheduled to be probably towards the early second half of this year. It's going to be a huge revenue driver for Venmo, as it's still in its infancy. So we have to be on the lookout for this, and this is definitely a positive. I don't know anybody who doesn't see this as a positive. We'll keep a lookout on that, okay? And then PayPal remains a payment solutions industry leader, a giant with the most widely accepted wallet in the world. Nobody can deny that, okay? So this is here how we separate the bad from the good. There's a lot of bad, there's also a lot of good, okay? But this is how we focus on the next year, next 2 years, and how we see the stock performing in the future. All right, before we close it out, I'm going to give you guys my conclusion and a couple conference call details. I want to do this fast because I'm running out of time. I don't want to bore you guys for 20 minutes on conference call and everything, but we surpassed $1 trillion in total payments volume in the first time in history of the company. Record 5.3 billion transactions in Q4 alone. 5.4 billion free cash flow this year, or in 2021, actually. eBay put pressures. We talked about that. Without the eBay pressure, revenue growth is 29% for full year and 22% for Q4. That's really good. eBay's masking a lot of bad here, or a lot of good, actually, with a lot of bad. And that's going to go away in the second half of this year. Again, remember, we don't own a stock for the next 3 months or 4 months as a trade. We own it for 2 to 3 years at the least, okay? You also have supply chain issues, inflationary pressures, rather, and rising threats from the Omicron variant still affect the sales negatively, okay? Also, no stimulus, difficult comps to Q4 2020 numbers. Remember, when Wall Street looks at a stock, we're looking at the comparisons, the year-over-year comparisons, and PayPal was doing very well when the lockdowns were in effect. This is essentially a big lockdown stock. It went up to $310 a share, so it was doing excellently well during those times, and it's hard to outdo that. So the comparisons are very tough, okay? Today, more than 70% of the top American and European retailers and more than 80% of U.S. top retailers accept PayPal or Venmo at checkout. Huge, okay? We have expanded agreements with Instacart, Gap, DoorDash, Adobe, Oracle, and Salesforce. Buy now, pay later is an exploding growth segment with 325% growth in Q4 year over year. I think we're going to continue to see this into full year 2022, excuse me, and Venmo is still in its infancy of growth with the added bonus of the Amazon Venmo payment solution system, and then focus on data-driven ARPU may prove to be the right move. We talked about this before, okay? Now, in conclusion, guys, let me close this out. You own the stock if you believe that the focus on average revenue per user is the right way to go, rather than adding 100 million subscribers that don't make you any money, that actually lose you money on your bottom line, okay? And you also own this if you believe that management can execute on this plan. If you don't believe that management can execute on this plan, then don't own the stock. Don't do it, okay? We also have the Venmo and Amazon deal. That's huge. Nobody can disagree that that's huge for the company, okay? And then the eBay transition stops in the second half of this year. That's going to relieve a lot of pressure on the top line revenue number, okay? We also have supply chain issues, the Omicron, you guys know what I mean by that, and then inflation drawdown in the second half of 2022. If you believe that, then you're adding PayPal like a maniac, okay? And I will do that. I already have a significant position. It's actually a pretty big position. I'm looking to double that position just slowly in the next 6 months. I think there's going to be some pressure. This is a disliked stock in the stock market right now, but take advantage of that, guys. How often can you get to say, I bought a stock when it was the most disliked corner of the market, and then when that turns around, you're the happiest guy ever. Not a lot of people get to actually experience that, all right? If you guys have any questions, please let me know. Hit me up on Instagram, the Discord, Stock Gladiators Discord, on Discord, of course, and hit me up here on YouTube, or hit me up in the comments, guys, all right? Peace out. Why won't it close?